Hey everyone, welcome back to the channel. If you're new here, hit that subscribe button because today we are diving deep into one of the most dramatic stories in the precious metals market. We're talking about silver's insane rally in 2025, the shocking crash that just happened, and what experts like Robert Kiyosaki are predicting for 2026. Trust me, whether you own silver or not, this story affects your wallet. Let's get into it. The historic rally first. Let's talk about how we got here. At the start of 2025, silver was trading around $20 per ounce. Nothing special, right? But then something extraordinary happened. Over the course of just 12 months, silver prices exploded by an absolutely staggering 182%. That's not a typo, 182% gains. While the S&P 500 delivered solid double-digit returns, silver absolutely crushed traditional investments. It even outperformed gold, which itself hit record highs above $4,500 per ounce. By late December 2025, silver reached an all-time high of $84.03 per ounce. For context, the previous record set back in April 2011 was only $49.76. Silver didn't just break its old record, it obliterated it. So what drove this massive rally? Three key factors. First, industrial demand skyrocketed. Silver is essential for solar panels, electric vehicles, semiconductors, and AI data centers. As the green energy transition accelerated, so did silver consumption. Second, supply constraints. The global silver market was already running a massive deficit, with demand exceeding supply by approximately 230 million ounces in 2025 alone. And third, the macroeconomic environment. Concerns about inflation, a weakening US dollar, and geopolitical tensions drove investors towards safe haven assets. Robert Kiyosaki saw this coming. He'd been accumulating silver since the 1960s when it traded below $1 per ounce, and he publicly predicted silver would explode in 2025. The crash, but here's where things get wild. On December 29, 2025, just hours after hitting that record high of $84, silver experienced its steepest single-day crash since September 2020. The price plummeted 16%, collapsing from $84 down to $70 in a matter of hours. By the end of the trading day on December 30th, silver had fallen further to around $72. What caused this dramatic reversal? Two words: margin requirements. The CME Group, which operates the COMEX Silver Futures Exchange, raised margin requirements by a massive 30% overnight. For March 2026 silver contracts, traders suddenly needed to deposit $25,000 per contract, up from previous levels. Here's why this matters. Margin requirements are essentially the cash deposit traders must put up to hold futures positions. When the exchange suddenly increases these requirements, traders who can't meet the higher threshold are forced to liquidate their positions. This creates a cascade effect. As leveraged traders were forced to sell, it triggered stop losses and panic selling from other market participants. The result? A 16% crash in just hours. Precious metals expert Mike Maloney called this a structural shock but emphasized that forced selling doesn't end bull markets. It's mechanical pressure, not a fundamental change. Robert Kiyosaki had actually warned about this just days earlier. On December 28th, he posted on X, "FOMO, fear of missing out mania crash is coming. If you are planning on investing in silver, be patient. Wait for a crash, then go, or no talk about perfect timing." Kiyosaki's $200 prediction. Now here's where things get really interesting. Despite warning about a crash, Kiyosaki remains extremely bullish on silver for 2026. On December 27th, he posted, "Silver over $70. Great news for gold and silver stackers. Bad news for fake money savers. I am concerned 70 silver may signal hyperinflation in 5 years as the fake dollar keeps losing value. Don't be a loser. Fake dollar will continue to lose purchasing power as silver goes to $200 into 026, $200 per ounce. That would represent a nearly 200% gain from current levels around 70-75. Kiyosaki's long-term conviction is based on decades of experience. He first bought silver in 1965 at under $1 per ounce. He became a true believer when prices rose 2 for $5 per ounce around 1990. Today, with silver above $70, his strategy remains consistent: accumulate on dips, be patient during corrections, and maintain a long-term perspective. In his own words, there will be a major pullback before it begins climbing again. I stand by what I am doing. I will buy silver up to $100 and wait. If and when silver crashes, I will be patient and wait till the silver market tells me what to do next. Kiyosaki also revealed his tactical approach. If silver crashes significantly, he plans to trade some of his silver holdings for gold. He views gold as the more stable long-term store of value, calling it God's money. This isn't about abandoning silver. It's about strategic rebalancing based on relative valuations, China's game changer. But there is another massive factor that could push silver prices even higher in 2026. China eased new export restrictions. On January 1, 2026, China implemented a strict licensing system for silver exports. This replaces the previous quota system and effectively gives the Chinese government direct control over 60–70% of the global silver supply. Under the new rules, only large, state-approved companies can export silver, and only after obtaining special government licenses. To qualify, firms must meet stringent conditions including an annual production capacity of at least 80 tons and proven export history from 2022 to 2024. Why does this matter? China isn't just a major producer. They're the world's dominant refiner of silver, processing metal from around the globe. Even Elon Musk weighed in, posting on X, "This is not good. Silver is needed in many industrial processes," and he's right. Tesla and other electric vehicle manufacturers rely heavily on silver for power electronics and battery systems. Solar panel manufacturers need silver for photovoltaic cells. The semiconductor industry requires it for countless applications. China's export restrictions mirror their earlier strategy with rare earth metals. By controlling supply, they gain geopolitical leverage and can prioritize domestic industrial use over exports. The timing couldn't be more significant with the global silver market already running a massive structural deficit. Removing or restricting Chinese supply could trigger what some analysts are calling the Great Silver Squeeze of 2026, CME manipulation or risk management. Let's go back to those CME margin hikes because there's more to this story. On January 13, 2026, the CME implemented another major change. They shifted from fixed dollar amounts to percentage-based margin requirements. For silver, margins are now set at 9% of the contract's notional value. Critics argue this is market manipulation designed to suppress prices and protect short sellers. They point to historical precedents like the Hunt brothers in 1980, when margin hikes helped crash silver from $50 to $10 in just 2 months. However, the CME defends these moves as necessary risk management, with silver experiencing 100% plus gains and wild intraday swings. Higher margins ensure clearing members can meet their obligations. From a technical perspective, silver's indicators were screaming overbought. The RSI hit extreme levels, showing a bearish divergence. The silver-to-oil ratio reached record highs. Some correction was inevitable. The question is, was this a natural market correction that the CME helped facilitate through prudent risk management? Or was it deliberate suppression of a market threatening to expose problems with paper silver contracts? The truth probably lies somewhere in the middle. What should investors do? So here's the million-dollar question. What should you do about silver right now? Robert Kiyosaki's advice is clear: patience and discipline. First, don't chase rallies. Kiyosaki warned against FOMO buying at all-time highs. If you bought silver above $80, you're now underwater. Second, wait for corrections. The current volatility creates opportunities. Kiyosaki himself said he'll continue buying up to $100, but with patience. Third, focus on physical metal, not paper contracts. Physical silver doesn't have margin calls and provides direct exposure without leverage-related risks. Fourth, maintain a long-term perspective. Whether silver hits 200 next year or takes 5 years doesn't matter if your time horizon is 10 to 20 years, but understand the risks. Silver is highly volatile. It moves about 1.7 times faster than gold in either direction. The market can remain irrational longer than you can remain solvent, as the saying goes. Also consider portfolio allocation. Even bullish experts don't recommend putting everything into silver. Kiyosaki himself also advocates for gold, real estate, and building cash-flowing businesses. Analysts at Saxo Bank and MoneyWeek suggest the correction may need to complete before entering, with technical indicators pointing to consolidation between 60–80. However, long-term fundamentals remain strong. The supply deficit isn't going away. Industrial demand keeps growing, and now we have China's export restrictions adding fuel to the fire. So there you have it. Silver in 2026 is shaping up to be one of the most dramatic stories in commodity markets. We've got record rallies, shocking crashes, geopolitical maneuvering, and legendary investors making bold predictions. Robert Kiyosaki believes we're going to $200, but expects major volatility along the way. China's tightening its grip on supply. The CME is adjusting risk parameters, and millions of investors are trying to figure out what to do next. My take: the fundamentals for silver remain compelling, but the path forward will be anything but smooth. If you're investing in silver, make sure you can stomach the volatility. Use corrections as opportunities, and never invest more than you can afford to lose. What do you think? Is silver headed to $200, or are we witnessing the formation of a massive bubble? Drop your thoughts in the comments below. If you found this video helpful, smash that like button and subscribe for more precious metals analysis and financial education content. Hit the notification bell so you don't miss our next video. Thanks for watching, and I'll see you in the next one with subscribe button and related videos.